Financial trader you can find at the website www.fibstalkertrading.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening. Today is Sunday, July the 7th. It's almost midnight. And this video is my video review for the week. I'm going to review the major markets, the 13 markets I follow. Actually, from this week I add silver as well. I'm getting more and more interested in working silver deal, and so I'll start following this market as well. So let's start from the euro dollar. Of course, you heard about the decision, the no from Greece, and it's only mildly impacting the euro. The euro opened lower, of course, but there was not that huge selling that one would expect. And actually, this market went to test again the same level that was tested last week, and that's the all the way halfway back 109.50 level here. As you can see at the open, that was retested again. So there's no reason to panic in the euro. If the euro had to move much lower, it would have actually done that so already. And let's don't forget that the weekly are not interested in pushing this market lower. How do we see that? We look at participation at the next measure move short, and that next measure move short was pierced on the upside, as you can see here, and that gives us the information that really the weekly might not be interested in pushing this price lower. And remember also that the situation in Greece is going on now since a few years, so I wouldn't get excited and worried at this stage. Of course, if we pierce 108.46, things might change. That's not the case, and as you can see, we saw participation again at this 50 level. Moving to the S&P500, a few weeks back I mentioned that this market could go and retest the 2025 level, and that's where we are heading to. I want to remind you that in this market we are still in extension along here. There's no reason to panic in this market, and there are multiple levels of support on the daily first, and then also on the weekly. And actually, on the weekly level, before you sell your stock, you sell your portfolio. It's not necessary just yet, because and eventually it will become necessary. I don't know when, but I anticipate an important crash in the US market. I don't panic, because we follow what the algorithms are doing, and algorithms back in October, they have supported this price higher, and the market came back down into this 1830 at that time. The third contract of 2014 was actually 1830 is supporting this price into the first target, as you can see. So if this price were to retrace all the way into lows, the next level of strong support would be 1877 on the current contract. Okay, so no reason to panic yet here. And when we move to the smaller time frame here, we know that there is another strong daily support at 1887, and we have the possibility of retesting this 2025. Some followers who could not believe that that could happen, actually, but that's exactly what's going on at the moment, and there was no way I could anticipate this. I'm just following the possibilities and the sequence of measure move here. So at the moment, the market has been showing its end 2080 here as traded. This was identified after the fact, so I'm not claiming I identified this before the fact, but it is important to know it also after the fact, because we know now that this price is being pushed into 2031 and eventually can make it very well into the 2025, and we will see whether this market will actually continue lower. There's also another way to model this price using this anchor here. I prefer the other one. This anchor actually came 3 ticks. We could also use this one, which allows us to use the next measure move if price tests 2025. Moving to the dollar index, nothing has changed here. We know that the dollar index is actually between 2 important levels. The first one is the 160 here, and the second is an extension long that actually has been estimated twice now. So at the moment, nothing to get excited about in this market. This market is in a lateral move, can go back to 101 here, and then we can see what happens. Moving to gold, as you know from the weekly time frame, you know very well that gold is actually on top of a large area of support. We don't know whether gold will continue lower and below 1056, although this seems unlikely to me with the Fed and also the other central banks keeping printing currency here. So gold is the real final storage of value. So I don't think personally that gold will go lower, but what I think it's not important, what the market shows, it's much more important, and if it goes lower, it's going to be a very good opportunity to keep buying gold here. So lows here showed a participation 1230 on the downside, and that's what's going on at the moment. This market is very technical at this stage on the both on the weekly and daily time frame. The point is that it's not easy to short it at this stage, but as you can see, when we trace the measured move, that was the weekly 1226 pushing lower. This is the daily 1198 here pushing lower, and it's pushing into 1146. And then also when we look at the middle measure move here, we can see that it's very technical. Participation on the short side 1187, bringing price into the first target, and again participation on the next measure move here, pushing price into that 1149, 1144 here. Moving to silver, this is my new addition, and I'm going to I'm very interested in silver, especially specifically for holding it physically, actually for holding it physically. So we had an extension after the fact here, 38.44 pushed price into the first target, 22.41, and to the pip into the second target, which you see here, the 14.08. So one could make the case that this market has to retrace, although we're seeing it moving lower, and it has to retrace into 2085 according to the price of the silver mini future here. Now that's very possible, so we could see this price getting into 20 and then retracing. So building a position here, it's a smart thing to do, and that's what I'll be doing as well. So obviously the market can continue lower and retest this 1408, which would give good opportunity to keep buying. But it's not to be unexpected push higher into 2085. A lot of people would be calling for a new bull in silver. In reality, what we would look at is just a measure moving to the next 2085 level here that could actually keep pushing price lower. So it's a position that is going to be built between 15 and 20 here, and after that, however, this price could continue lower, and actually let's see where it could go. Put 30% here, and the next measure move would actually push price into 11 price here, and potentially even lower, and that would be from 20. Now this price is being, as we know very well, I mean, there are very good chances and possibilities that this market is being manipulated. Now, if algos are pushing this price lower, we don't know that. There is the possibility for this market to keep moving lower here, much lower than 10, 11 here. But as you can see, if price gets into 20 level here, which is the next measured move, and algos are actually pushing this price lower, this could be pushed lower into $5.8, which is very, very close to all-time lows. Of course, this price went below the level as well, but that's very interesting, and I'm gonna keep following this market. So if you're interested, that's an interesting market to follow. Moving to US dollar versus Japanese yen, and sorry, just the information here is that I'll keep following this market, looking at the way algos trade this market. Okay, so I'm not going to look at this market using traditional technical analysis. Moving to the US dollar versus Japanese yen, this market actually has been testing for the second time now in the open the 122 level, which is the next measure move. So we'll know whether this market is going to be pushed higher or lower. On the short side, this market has been quite technical, as you can see here. It received a push lower twice from the 124.15, so we have to test 121.66. And if that happens, this price will actually continue lower and even breach that 121.22. If that happens, if the 121.22 is lost, and let me remove some of these levels so I don't create confusion here, we are going to potentially see a lower level, and that would be the 120.71. So if you are in a short, there's no reason to exit the short now. Let's see if 121.22 is pierced on the downside. In that case, next level of support, important level of support, becomes the 120.71. Moving to the euro versus Japanese yen, those who follow me know that I've been looking at this market as a short into the 122.11. This market has actually moved higher due to weakness in the Japanese yen here, but now it has reversed, and it could actually bring price into the first target, which is just below that 122 at 120.40.50 there. And if this is pierced, that could be a good opportunity to get long that level there. So that's what's going on in this market. It's still a short into 122 area. Pound versus Japanese yen has been trading jumping extension here, 174.85. Didn't get into it just yet, so it's possible for this market to continue higher this week, hit that target, and then there could be a new measure move. It's also possible, of course, for this market to test this 185.39 before. This market still has to touch the first level. Will it do this? Remember, pound might be weaker due to the weakness in the euro, but the euro is still holding, so it's possible for this market to continue higher and hit that first target. Pound versus the US dollar, this market has been trading nicely here. We spot both the levels that were identified here, and I actually used the actual notable anchor here. Notable anchor are traces that you learn when you join my Fibstalker Metals coaching program. I'll have the new program starting in September, by the way, and we had the participation here, and then the market went and traded the full all the halfway back. When you look at this information, you can look at it without risking, and actually with free risk trade we got one here and the other one here, so there is the possibility for this market now to be pushed lower and lower into a previous level 139.42. The short have traded twice here, and again the 50% 158.82 level has traded as well. 139.42 is the next target. Australian dollar versus US dollar. It's into, on the weekly time frame, an area of potential participation long. We are not seeing that participation long here, and price keeps pushing lower into this area. The end of the area of support is 071.83. So this market could actually reverse before it gets there, and it has traded an extension, notable extension here, and which has reached the first target, and the inner measure move years also have been very, very technical. So this was another market that offered opportunities here. And the second target of the inner measure move, it's a little bit lower, so this market could actually continue lower and then retrace, continue lower into the second target, in which case we're going to model next this market using extensions. New Zealand dollar versus the US dollar has actually been trading in extension, a very good sequence of extensions here, and this market hit first, retested this level at first and second target, and then being very, very technical with a nice sequence of measure move that could be traded as well, and participation 069.80 here, and then price got into the first target. You see participation, profiting in this first target, continuation into the second target, and then again the next measure move working here, and so this market is now has tested the second target again. First and second target is actually around that level, but the next measure move has failed here. So to be very careful in continuing short in this market, and if you know that this market is into an area of potential support here, so don't actually forget to mind that, and also remember that this market on the weekly time frame is actually trading an extension here, and this extension has a second target before the area of participation from long end. So on the weekly, still in a short. On the daily, the sequence of measure move has failed, so this market could actually start moving higher. Moving to the US dollar versus Canadian dollar, this market is actually trading in a range as well, as you know very well. This market participated on the short side twice here. It's testing that 126.10 level again this week, so we'll see whether this market is going to break that level, which would mean that unfortunately the Canadian government is doing a very good job in inflating the currency against the US dollar. On one side, that's needed because Canada has to keep exporting, but on the other side, it's not good for the buying power of the Canadian dollar. So now this market, as you know, has been trading in a sequence of measure move here, and the extension that we were looking at, it's the highs to highs here, and actually it participated, as you know, in at the beginning of May here, pushing price higher where we were looking for. That's 126.50. So this week will be telling us whether the US are actually inflating their money faster than the Canada or vice versa. So we'll see that this week. Euro versus Canadian dollar is also interesting. It's showing that the Canadian dollar is weaker, um, throughout all the board here, and we saw participation at the beginning of last week from this 139, 136 level, which is pushing price higher into the 143.05. So that trade is still on, and we will see what happens at 142, 143 here. But clearly, Canada is actually inflating the currency here, and that shows up on the euro as well. Finally, the US dollar versus Swiss franc. It's a market that it's actually it has a downward bias in my opinion, and that's been showed by the fact that on the weekly time frame, the bulls were not capable of supporting price when the price came back, and as you can see, the 0.9094 was broken on the downside. Now, what is important here to notice is also that when we drill down on the smaller time frame, the market is actually not, it's not technical at all. So as we can see here, the bulls are not supporting this move higher. So what I anticipate in this market is a move lower eventually, at least to retest this 0.9326 to see whether this market becomes more technical for a push higher. Otherwise, this market is just retesting the previous lows here and the previous highs here, and there is a possibility for a continuation lower. So this is it for this week. Thanks a lot for watching the video. If you have any questions, just write an email to fibstalker@gmail.com. And if you are interested to my Fibstalker Methods Coaching program, in which I teach my students how to look at and model the algorithms that have effects on price of high volume markets, and also how to time this level that you see using a procedural approach called Fibstalking timing. That's a proprietary technique. Thank you very much for your attention and have a great week. Bye bye now.